Hi there, this is Tom Lee. I'm the Chief Investment Officer of Fundstrat Capital and the lead portfolio manager for Fundstrat's U.S. Large Cap Granny Shots ETF. This is our update for the week of October 17th. First, let me start with some particulars. As of October 17th, the price of Granny Shots was $25.10, net asset value of $25.10, and total assets of $3.3 billion. For the past week, Granny Shots gained 1.5% compared to a 1.71% gain for the S&P 500, which means Granny's underperformed by roughly 21 basis points. Year-to-date, Granny Shots is up 25.75% compared to a 14.47 gain for the S&P, which means Granny has outperformed by 1,128 basis points year-to-date. I also want to talk to you about flows because Granny recently crossed the $3 billion threshold, and this is the monthly inflows into the Granny Shot ETF. Month to date, Granny Shots has gained $334 million, but we're only midway through October, so it looks like Granny could have one of its strongest months. With regard to macro, I want to talk about third quarter earnings season, among other things. We are entering the heart of earnings season, and so far 84% of companies are beating by 6.2%. So it's a good earnings season so far. Last week, it was really the banks that mattered the most. Wells Fargo, JP Morgan, Goldman, Citi, Bank of America, and Morgan Stanley, and they all beat solidly. Two of these happen to be Granny Shots, JP Morgan and Goldman Sachs. JP Morgan said the consumer and small business remain resilient based on our data. While we're closely watching the potentially softening labor market, our credit metrics including early stage delinquencies. Well, our credit metrics, including early stage delinquencies, remain stable and slightly better than expected. That's a good sign. Overall, companies are expected to grow earnings 9.3% in the S&P and 43% in the small cap space. So small cap earnings growth is strong. That's a good sign to me. But it's really this week from October 20th, which is this week, through November 3rd is the heart of earnings season. You can see how many companies report each of those 3 weeks. Now, not everything's been great on earnings. I'd say that private credit has been what people have raised their eyebrows about. Tricolor Auto and First Brands Group. Well, First Brands looks like an outright fraud situation. But if you're worried about credit, just keep an eye on high yield, which has actually been spreads widened, but it's hardly alarming. It's lower than it was in April of this past year during the tariff heights. And if you look over the last 10 years, you can see 347 basis points wide is a pretty mild reaction in high yield. So it's not alarming. For the week coming ahead, there is a lot of macro, but I'd say the market's going to focus on Friday's September core CPI. Now that's going to happen even with the government shutdown. So they made an exception here to report that number. And then there's some important Granny earnings this coming week: GE, Netflix, Lam Research, Tesla, and GE Vernova. And this is mapped out here. So far, only 4 of the Granny Shots have reported, but it's been good numbers so far. And let's talk about the government shutdown. We're in the 16th day. In 2018, it was 35 days, so it's been 7 years since we've had a shutdown, but I'm sure this is going to potentially run longer. Polymarket flipped on October 9th and now expects a very extended shutdown. In fact, 81% odds this will be more than 30 days, which means it'll go past November 1. And I want to talk about sentiment too, because the latest AAII reading came out at minus 12.4. So there's more bears than bulls. But here's the thing. The average reading this year has been minus negative 11.7. So investors have been bearish all year. Okay, it's similar to sentiment in 2022. But here's why it matters. We're down double digits on average for sentiment. The last 3 times we had negative sentiment was 1990, 2008, and 2022. Those were all bear market years. investors are acting like we're in a bear market, yet the market's up 13% year to date. So I would call that the most hated V-shaped rally. And then as far as stock performance within the GRNY portfolio, the top 5 performers this past week were KLA, Kencor, American Express, AMD, Lam Research, and Broadcom. Most of these are AI semi names. And Amex had good earnings. The bottom 5 were S&P Global, Axon, MicroStrategy, Robinhood, and Arista Networks. And as far as themes go, the number 1 performing theme has been global labor suppliers, followed by easing financial conditions, and style tilt. That's it for now. Thank you, and I'll speak to you soon.